Hey everyone, and welcome back to Wealthstone. It's been a little while, and I'm happy to be back, and boy, do we have a lot to catch up on. We're now into the spring, and overall, I've been really encouraged by the direction of the markets so far this year. We've seen resilience, improving sentiment, and some strong performance across equities around the world. That said, as always, there are still risks on the radar, and the big one this week has been developments in the Middle East, specifically around the Strait of Hormuz. So let's break down what's going on and what it means for your portfolio. Let's start with the headline. As everyone knows, tensions in the Middle East disrupted shipping through the Strait of Hormuz, one of the most important oil routes in the world. At its peak, there were real concerns about how much global supply could be affected, and markets reacted quickly, pushing oil prices higher and the markets lower. But just as quickly, we saw a reversal. Iran has now announced, as of April 17th, that the Strait of Hormuz is open to commercial shipping again, following a temporary ceasefire in the region. And the market response? Immediate. Oil prices dropped more than 10% in a single day, and equity markets surged on the news. It's a great example of how quickly markets can react when uncertainty is introduced, and then just as quickly removed. Now, let's zoom out and look at the bigger picture, how markets are actually performing so far this year. Because despite all the headlines, 2026 has started off on pretty solid footing. In the US, equities have continued to show strength. We've seen solid earnings, continued momentum in technology and AI-related companies, and overall resilience in the economy. Here in Canada, the TSX has also held up well, supported by energy, financials, and commodities. And globally, we're seeing international and emerging markets starting to gain traction again, with stronger performance outside North America than we've seen in quite a while. So overall, it's been a pretty constructive environment for investors. Now, that doesn't mean it's been a straight line. We've had volatility, and we've had moments like this week with a strong rebound. But if you stayed invested through some of the noise earlier this year, this is exactly why. As I often say, it's not timing the markets, it is time in the markets. Now, let's turn to Canada. Here at home, the story has actually been fairly steady, and in some ways encouraging. Inflation came in at 1.8% in February, which is right around the Bank of Canada's target. That's a big shift from where we were just a year ago, and it suggests that a lot of the heavy lifting on inflation has already been done. Now, I'm sure a few of you are thinking, boy, it doesn't feel like 1.8% of the grocery store, and you're not wrong. But from a policy standpoint, this is progress. Because of that, the Bank of Canada has moved into a more wait-and-see mode. We're no longer in that aggressive hiking cycle, but we're also not seeing rapid cuts just yet. It's more of a holding pattern while they watch how the economy evolves. Growth is still modest, consumer spending has cooled, and the housing activity has come off its highs. So it's not a booming environment, but it's also not a weak one. I'd call it steady with a few question marks. Now, let's take a step back. While the reopening of the Strait of Hormuz is clearly a positive development in the short term, it's important to remember that this situation is still evolving. The ceasefire is temporary, and tensions in the region haven't fully disappeared. So while markets are reacting to the easing of supply concerns, there is still the potential for volatility if conditions change again. And this is something we see time and time again. Short-term shocks followed by sharp reversals, all driven by expectations. So, to wrap it all up, markets have been trending in a positive direction to start the year. Oil prices dropped sharply as supply concern ease, and Canada is seeing inflation come back under control, with the Bank of Canada in a holding pattern. But global uncertainty, especially geopolitical risk, is still something to watch. It's a great reminder that markets don't move in straight lines. So stay patient, stay diversified, and stay invested. Calm in the chaos, that's the Wealthstone way. Thanks for watching, and we'll see you in the next update. Be sure to like and subscribe.